G'day folks, this is another user request for Wheaton Precious Metals. Now I'm going to be demonstrating the company charting from the New York Stock Exchange. Of course, this company also lists on London Stock Exchange and others, but pretty much the charting is all the same. So again, if you've got any queries, please feel free to request them, and I'll do my best to cover them in future videos. So again, here's for Wheaton Precious Metals. Again, the outlook here for analysts, again, these are all based on various websites and analysts reporting. So the ratings from the analysts, the stock has consensus rating about a strong buy from 8 analysts with a 12-month average price target of 77.25, indicating a potential upside of approximately 35.1%. Financial performance in 23, the company reported revenue of 1.02 billion, a 4.6% decrease from the previous year, and earnings of 537 million, down 19.6%. Valuation metrics, WPM has a price to earnings ratio of 40.83, indicating a premium valuation compared to industry peers. The dividend yield, the company offers dividend yield of approximately 1.03%, providing income to shareholders. Recent developments: on January 9, 2025, WPM announced that Chief Financial Officer Gary Brown will step down, with Vice President Finance Vincent Lau appointed as his successor. And in terms of the market outlook, with rising silver price and increased industrial demand, particularly from the solar energy sector, WPM is well positioned to benefit from favourable market conditions. So as always, we look at the long-term charts first. So even if you're trading on the daily, we look at the monthly, the weekly and the daily, and the micro charts. So here on the monthly, we've got the CCI 150 has actually broken down into that moving average range. The price is still above its moving averages, but as you can see, we've had a couple of bearish months in the last couple of months. And to learn how to draw these moving averages, that's in the description below, so just reference that video. So it's later after this video. So on the monthly, pretty much we're in I would say a neutral positioning, not necessarily bullish or bearish. On the weekly, we do have also a bearish outlook. The price is broken below its moving averages, likewise the CCI. And as a result of this bearish divergence, you'll notice there slightly lower highs on the CCI versus higher highs in the price. And that actually pulled back and hit our 23-38% target range. And for those new to the channel, what we look at is a Fibonacci retrace to a significant low before that divergence started. And we look at the 23-38% as a minimum. And in this case, it's actually hit that quite easily, and it's actually broken below that around the 38% level at the moment. It's fluctuating there. And we also head back here. Let me just delete this Fibonacci. We had here a bullish divergence. So the higher lows on the CCI versus almost a double bottom there on the price. And that actually bounced from there. So again, in terms of a retrace, we would have taken it back to that previous high. At the very minimum, we would have retraced around that moving average line there, but in this case, it went well beyond. So if we drew a Fibonacci extension, let's go from that to there. You can see there it's currently broken up around 123% Fibonacci extension level. So that's on the weekly. If I go back, and you can see there a bit more history, another bearish divergence there versus higher highs on the price. It pulled back, and that would have been roughly maybe around a 50% retrace level. That's on the weekly, as I said. Now on the daily, we have it's slightly broken above the moving averages on the CCI. The price is still in that mid-range of the moving averages, so not quite bullish yet. Now what I want you to understand is we trade in the direction of the higher time frame. So you'll notice that even though it's a fresh breakout on the daily, I want to see this weekly be more bullish and break above the moving averages. So for example, and I use this as a quick example, see how it's broken above there on the weekly, and that during that period, that was around October. So that was during this period on the daily. So you would have ideally, at that point when it broke above on the daily there, that was in line with a bullish move on the weekly. So you would have been a lot safer in terms of probability to go along there, and that would have given you a nice little gain, and you would have got out on the trade. I like to exit the trade when the CCI hits that moving average range. So let me just zoom into this daily for a minute. So you would have got in there on that one. That's in alignment with the weekly bullish trend, and you would have got out at the bottom at the end of that trade. Assume you got in at the end of the trades of these days. When that CCI hits that moving average range, you would have made just under 5.4% in 7 days in that little trade there. So what I'm saying is, don't go long yet. I'd wait for that the weekly to also break above to be more bullish. Now, it looks like that, first of all, let's go back to the weekly for a moment. It looks like that bearish divergence has probably played out, although just be cautious of it. We may still see further downside with the CCI still in a bearish momentum on the weekly. So just be careful about on the daily, even though it's broken higher. I'd like to see that break above on the weekly. I'll just keep repeating that. Going to the micro charts, we look at the daily. If you're trading on the micro level, and this applies to any chart, we trade in the direction of the higher time frames. So in this case, we'll be going long only. So again, going back to this period, you can see there you would have taken long positions when that broke above on the 8th of January, so around about this period there. Now in this case, it's a bit pretty much going sideways. I'd like to see it break, and I'd like to see the moving averages break a lot higher like it did back here. You'll notice as well here we had a bullish divergence, higher lows on the CCI versus lower lows on the price. And again, in terms of Fibonacci retrace, as a minimum, I don't trade these. I look at these potentially to get out of the trade. We look at a minimum retrace between that 23 to 38% retrace level of that Fibonacci. You can see there it's hit that range, and it's currently bouncing back down and below that CCI and price moving averages. Now, what I want to also introduce as well is another indicator. This is a multiple indicator, and it's also attached in the description below. So basically what it looks at is various, the MACD, the stochastic, the RSI, the CCI, and some moving averages. And whenever it's hitting +3 or above, it gives you these blue arrows, and that indicates when it's broken above there, or when it breaks below the -3, it gives you these red arrows. And the way I like to trade this indicator is, I look at divergence. So you can see here, for example, during that period, there was a bearish divergence there, and there was a higher highs on the price there, and you would have traded that going low there. Now that was a small gain to go short, and that happened to coincide with the CCI breaking below the moving average range there, and again you would have got out. That would have probably been a break even on that one. At this point, there's no other divergence to talk of, so even though there's some red arrows here, they're not all wise to trade. So what we're looking at, potentially looking at trading these this indicator with the divergence. Saying this is the only indicator, the only divergence I saw with a bearish indicator. So not a real trade there to take. And going back here, for example, we had another bearish divergence on the CCI versus higher highs on the price. There was a couple of bearish indicators shown here with a multiple indicator, and you would have taken a short entry there when it broke below, and the moving averages started breaking below into a downtrend. So you would have been wise to take a trade there, and that would have been a nice little trade to take. This is on the daily chart, so you would have made a nice little trade there. And again, you could have got out with the when the CCI broke into that moving average range. So if I zoom into this one, so you would have gone in short there at the close of that day, and you would have got out with that CCI breaking into that range there. So that would have returned about just under 7% return in 11 days. And you could have got in again at the trade with that break below, because remember, we're going in the same direction, going bearish, and you would have got out with that break above there on the CCI, the breaks above in the moving average range, and that would have returned just under about 4.5% in 15 days if you were trading a short trade in that one. So in summary, probably avoid going long on the daily. I'd like to see this break higher on the weekly, like it did back here at least, maybe ideally one of those sort of scenarios, to take long entries on the daily. So just be cautious. We could see further downside here with the moving average on the monthly moving further to the downside, so just be cautious of that. Also, we look at the Yahoo Finance page on the summary page, and just confirming what sort of dividend it pays. There's a 1.8%, 1.08% dividend yield, which is not too bad if you're a dividend receiver, if you prefer buying stocks with dividends. Going to the holders tab, in terms of major holders, institutional holders, Capital World Investors, First Eagle and Van Eck Associates are the top three, followed by Vanguard, etc. And then insider transactions. Now in the last 6 months there were no purchases or sales made, so that's probably a good thing. In other words, no insiders have made any sales to dump any stock, but at the same time no one actually purchased any. So just something to consider when you do buy and potentially buy any stock. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.